सो हेलो एवरीवन, अगेन आप लोग का स्वागत है हमारे इस प्लेटफॉर्म पे जिस पे हम लोग डिस्कस करने जा रहे हैं गोल्ड मार्केट के बारे में। डेली बेसिस पे हम लोग डिस्कस करते हैं। आज हम लोग देखेंगे कि आगे की क्या न्यूज़ और एनालिसिस है। तो डिस्कस करने से पहले एक बार कंफर्म कर दीजिए आप लोग को आवाज़ क्लियर है, स्क्रीन प्रॉपरली विजिबल है। इफ यस, काइंडली प्रेस 40 so that we can continue our session from here. So hello everyone, again आप लोग का 18 देख सकते हैं गोल्ड का अभी तक 1821 के आसपास 1821.1314 के आसपास मूवमेंट दिखाते हुए 3 मिनट बाद इस कैंडल की क्लोजिंग का टाइम है। देखेंगे नेक्स्ट कैंडल की फॉर्मेशन किस डायरेक्शन में होती है। फिलहाल 1821.1310 के लेवल्स बनते हुए मार्केट में 1821.1713 के लेवल्स बनते हुए प्राइस स्लाइड मूव करते हुए करेक्शन की ओर 3 मिनट बाद दूसरी कैंडल फॉर्मेशन का टाइम देखेंगे, उसका डायरेक्शन किस साइड है। उसके बाद डिस्कस करेंगे अपने न्यूज और एनालिसिस को। एटीन 21.4951 के लेवल्स पूरी तरीके से मार्केट कंसोलिडेशन फेज पे। हम लोगों ने आज एक पोजीशन ही कैरी की थी जिसमें कि 1819 पे 2 कॉन्ट्रैक्ट बाय किए थे। 1824 पे क्लियर करके $1018 के प्रॉफिट और ओके, एक दूसरी कैंडल फॉर्मेशन 1820.9 के लेवल्स पे फॉर्म होती हुई। एटीन 20.8 18 20.7 के लेवल्स पे प्राइजेस मूव करते हैं। हम लोग आ जाते हैं अपने न्यूज सेक्शन की ओर और हम लोग डिस्कस कर रहे हैं गोल्ड न्यूज एफएक्स स्ट्रीट के बारे में। Okay, so gold correct from 2 month tops. Downside seems limited. Gold edged lower on Monday following an early uptick to 2 month tops. Rebounding US bond yields acted as a headwind for the non-yielding metal. The cautious market mood helped limit losses for safe haven commodity. From a technical perspective, last week's sustained breakthrough the 1800 mark and acceptance above the 1810 levels favors bullish traders. Hence, some follow through strength towards testing a strong barrier around the 1832 to 34 heavy supply zone remains a distinct possibility. That said, weakness below the 1800 mark might prompt some long unwinding the drag gold price back the 1700 level 1780 level en route the 1770 support zone. Fundamental overviews की बात करें so gold witnessed modest intraday pullback from 2 month tops touched earlier this Monday and dropped to the 1813 to 12 region during the early part of the European session. So gold witnessed the modest intraday pullback from 2-month tops just earlier this Monday and dropped to the 1813 to 12 region during the early part of the European session. This marked the first day of a negative move in previous three sessions and was sponsored by a goodish rebound in the US Treasury bond yields, which tend to drive flows away from the non-yielding bond metal. The Fed last week stuck to its transitory inflation narrative and indicated that policymakers were in no rush to hike borrowing cost. Investors, however, seems convinced that the US central bank would be forced to adopt a more aggressive policy response to contain stubbornly high inflation. So this in turn triggered a fresh leg up in the US bond yields and acted as a tailwind for the US dollar, which was seen as another factor that weighed on the dollar denominated gold. Meanwhile, the cautious mood around the global equity markets acted as a tailwind for the safe haven precious metal and helped limit any deeper losses, at least for now. Nevertheless, gold for now seems to have snapped to successive days of winning streak and remains at the mercy of the US bond yields. In the absence of any major market moving economic releases from the US, So meanwhile, the cautious mood around the global equity markets acted as a tailwind for the safe haven precious metal and helped limit any deeper losses, at least for now. Nevertheless, gold for now seems to have snapped two consecutive days of winning streak and remains at the mercy of the US bond yields. In the absence of any major market moving economic releases from the US, traders will take cues from Fed Chair Jerome Powell's remarks later during this US session. The focus, however, will remain on the latest US consumer inflation figures due on Wednesday. The CPI print will play a key role in influencing market expectations about the likely timing of the Fed's policy tightening, which in turn should help determine the next leg of a directional move for gold. So 1 week average forecasting is 1798.50, that is bias bullish. For 1 month it is 1805, and for 1 quarter it is 1834.58. अभी हमारा 9 बजे फेड चेयर जेरोम पवेल स्पीक देखने को मिलने वाला है.
Latest point and bounce back up. Take a look at SQ. SQ is trending higher. It is green, 0.8% or so. This is daily. I don't really like the daily. To me, it looks like a small pullback of a big down day on Friday. Normally, something like that doesn't hold. I mean, if it was a 3%, 4%, 5% pullback, could be something. But the way it behaves now, it's likely to fail, in my opinion. LYV, I believe what's going on with LYV. You're right. $117 looks very nice. Actually, I feel like taking this. I will take it. Daily. Wow. Okay, LYV under 117. I will be there with you, Ali. I like the daily. I like the intraday. It's a nice combination. Be careful, guys. It's a 20-cent spread stock. Volume is good, over 2 million. Daily is looking really nice. It's getting close. Stop loss is more than 1 point, a bit more than 1 point.
RBLX. What an ugly shakeout. This is RBLX. I should have stayed.
I would like to try to move in at 117, depending on the number of buyers, because I'm a little bit afraid it's going to move down too quickly.
Okay, guys, I'm leaving you a bit early today. I just closed RBLX and now it's moving to my entry point. So I lost in Roblox almost 1,919. mRNA, very small partial 570, but PayPal made my day up almost 2K. So I'm starting this week in green thanks to PayPal. And that will be it for me. I'll see you all tomorrow. And thank you. Bye.
See you, Yogi.
Meir,
Thank you.
kudos. Bye-bye.
Yogi, you take
Thanks,
care.
Yogi. Bye.
Have a great afternoon. See you tomorrow. Boeing under the lows. Endry traded Boeing last week successfully, very successfully actually, on the Boeing trade. And now it's under yesterday's close. Yeah, I would say so. What are you thinking at the lows here? Well, actually, right where it's at, yeah, at 223.37. Absolutely, looks good.
I'm out of mRNA. I'm tired of it.
Coin breaking out at the top, looking great.
I have a loser mRNA. Not a big one. Just stopped it relatively close. The only thing I'm interested now is LYV. I'm not trying to get back to green or anything like that. Surely a red day for me. Guys, I'll be right back. I will trade LYV with triggers, but I need to make a phone.
Yeah, coin now just broke out of the high now. Fresh new highs on coin COIN.
देखते हैं गोल्ड का मूव। तो गोल्ड 1822 के आसपास मूव करते हुए 1822.4443 के मैसेज पे। सो मार्केट पूरी तरीके से कंसोलिडेशन बेसिस पर 1821 22 के ही लेवल्स पे मूव करते हुए लगातार मार्केट बुलिश ट्रेंड में जाती हुई देखने को मिलेगी कि 1800 के प्लस मूव करती हुई दिख रही है, तो बुलिश ट्रेंड बना चुकी है ऑलरेडी। So gold price technical analysis focus on the 1833 high in September. So gold daily chart continues to remain strong. Meanwhile, along with the breakout of 1813 resistance level, the bulls may continue to lift the price to a high of 1830, increasing the likelihood that gold will continue to move higher at the beginning of the week. However, traders also need to guard against the risk of pullback as the RSI indicator was in overbought territory when the price reached the intraday high of 1821. Looking at the H4 chart, the 1785 to 1800 area below is a defensive zone for gold bulls, where the exponential moving average 55 simple moving average is located. If the downward force eases around here, traders can look at the opportunities to go long. आ जाते अपने डिस्कशन पॉइंट पे. So gold market commentary points to be discussed today. Gold rallied despite higher rates and equity strength. Gold rose slightly in October. The four key thematic drivers categories of gold's performance. US Mint gold coin demand is on track for its strongest year in over 2 decades. Gold price and moving average. Gold ETF flows by reason. So gold rallied despite higher rates and equity strength. Key highlights. So gold gained 1.5% in October in the face of higher bond yields as a surge in inflation expectations. A weaker dollar and improving futures positioning helped propel its higher as highlighted by our return attribution model. Gold ETFs have shown net disinvestment in 2021, but vaulted physical holdings and bar and coins markets suggest solid investment appetite for longer term investors. Looking forward, so some central banks are beginning to raise interest rates or taper asset purchases, and investors are beginning to focus on flattening rates curve and their potential implications if the trend continues. Investor question. So, what is the significance of the launch of first US Bitcoin ETF? How does the recent run up in commodities prices fit with the increased interest in ESG investment, and what are the implications for gold? US CPI and wages increased in September to multi decade highs. What does this mean for gold demand and performance? Gold rallies 1.5% in October to US dollar 1786, testing the US dollar 1800 level multiple times late in the month. Gold's positive return in October marked a reversal to its weaker performance in its previous 2 months. This performance is consistent with historical analysis that suggests that gold does well in early autumn. Gold price strength happened amid higher nominal yields. Gold had been generally inversely correlated with nominal bond yields this year. So gold slightly rose in October. However, a rise in inflation expectations overweight the move in nominal rates and resulted in lower rates. Additionally, risk on sentiment didn't curtail the gold price strength as many stocks indices. As many stocks indices closed at all-time highs with the US and Europe up 5 to 8% across major markets. While Asian markets were relatively flat to slightly lower, particularly with the weak Chinese economic data released throughout the month. While Asian markets were relatively flat to slightly lower, particularly with weak Chinese economic data released throughout the month, commodities were stronger, led by oil, up 12% on the month. Individual commodity supply constraint remains a focus for investors. Commodities were stronger, led by oil, up 12% on the month. Individual commodity supply constraint remains a focus for investors, which is a meaningful driver for recent performance. Gold net long positions on COMEX. So gold net long positions on COMEX future rose during the month to US dollar 40 billion from US dollar 31 billion the month before, the highest level since late August. This could have been a factor in gold price support, particularly from the investment side, as the bulk of the increase came from managed money positioning. टेक्निकल एनालिसिस की बात करते हैं. So if the price were to hold above US dollar 1800 OJET more consistently, the next resistance level would move up to US dollar 1875 or 5% higher from current levels as the downtrend would be broken. Nominal rates continue to weigh on gold, so consistent with our quantitative analysis, our monthly return attribution model suggests that nominal rates could continue to weigh on gold, but inflation break-evens, future positioning, and commodity currencies were instrumental in pushing the price higher. The US 10-year break-even inflation rate broke through 2.4% on October 5th, a level it had been flirting with for 4 months, and finished October 30 BPS, higher month on month, the highest level in 9 years. This could suggest that investors are more interested in the Fed's reaction to inflation expectation than to expectation themselves. Despite weakness in the US dollar versus the AUD and RMB, the broader dollar index was more resilient, and this cancelled out the impact of currency on gold's October performance. सो आ जाते एक बार हम लोग अपने MT4 टर्मिनल पे तो 1820.96 1821.2127 के लेवल्स ओके 1819 तक के लेवल्स टच करने के बाद वापस से एक बार मार्केट 1821 1822 के लेवल्स पे आते हुए देखने को मिल रही है तो हम लोग डिस्कस करते हैं गोल्डनेस किटको के बारे में।
Will Ryan joins us today. He is the CEO of Granite Shares ETFs. Will, welcome back to Kitco. It's a pleasure to have you again.
Thanks, David. Great to be back. Good to see you.
Good to see you too. Interesting slew of events this week, starting from the Fed announcing tapering later this month on Wednesday, and of course today on Friday, we had jobs numbers coming in stronger than expected. 531 jobs gained on the non-farm payroll side, which is higher than the consensus estimate. Of course, the unemployment rate also came down lower than expected, actually. So 4.6% was the latest reading. 4.8 was last month's. So the labor market is improving, at least on the surface, and we have the Fed announcing tapering. So they're also acknowledging the acceleration of the economic growth, or so it seems. Are they right to taper now?
Yeah, I think it was pretty well telegraphed, David. The number that we had, the provisional numbers that came out on Wednesday, I think kind of opened the door, for the tapering to happen. At least the announcement that they're going to reduce or start tapering this month. $15 billion a month, or probably takes us into June, July next year before the taper is fully ended.
Yes.
There's obviously left some room for wiggle room, of course, if something happens. But look, the basic message, I think, and you've seen that in the jobs report today, is that it's the economy is very strong. I mean, on the hiring front, everywhere I look, I see help wanted signs. You can't go to a restaurant, you can't go to a bar, you can't go to any kind of service venue without seeing signs of people just desperate for workers. And so it's no surprise to me that we've got the numbers that we're seeing today. And I think that will only continue as clearly the remnants of the virus die down, or at least our ability to handle the virus gets a lot better.
It's kind of a dangerous sign, no pun intended, when you see signs up for wanted workers, right? Because what needs to happen, Will, is either they need to raise wages sufficiently to motivate people to go back into the workforce, those that haven't re-entered the workforce, or certain businesses will have to operate at half capacity, maybe not even operate at all. I've heard of some cases where small businesses have to shut down, not because there's no demand, but because they just can't operate. And so
look, that's happening all over the place. And you see, that in terms of coffee shops, in terms of restaurants, the list goes on. But that's one thing. When I was in Florida at the end of last week, and the amount of people that were telling me that you have restaurants that only open certain days of the week, as opposed to before when you open every day of the week, or reduced hours for coffee shops. I mean, it's a story you're hearing all the time. They just can't get the people.
So what's next then? Are you going to see reduced growth from that side, or perhaps, like I mentioned, much higher inflation rates because wages will have to go up? What do you think is a more likely outcome?
Well, I think at the moment, David, it's higher inflation. So I do think that there's some of this still is, the pandemic-related, government stimulus or government, unemployment programs that are still kind of in the process of running off in different places. So there is still a factor there. But as we've already seen, I mean, minimum wage is going up, and employers are raising wages kind of across the board to try and get people in the door, try and incentivize people to work. So right now, that's part of the reason why we've got the highest inflation numbers we've seen since the 1970s. And so the immediate impact to me is higher inflation.
Last year during COVID, when everybody was staying at home, we had a surge in the savings rate. So people were flush with cash, and that's why they went out and started spending right at the start of the reopening. We saw restaurants, bars, services raise their prices for a lot of reasons, supply chain issues, and also because of higher demand. Do you think that higher demand is sustainable now that we're a year and a couple months after COVID, and now that things are starting to normalize?
Well, I mean, that is a massively key question. And, I guess nobody knows. At the moment, the demand is there because, like you say, people do have cash. They are willing to spend. People are looking to take part in experiences that maybe they lost out on, over the last couple of years. But the consequence, or the flip side of that, is the prices are going up. Now, some things are going to be staples that people just have to buy, whatever the price almost. But I think if it's more discretionary items, you could see pullback in demand for some of those things. But at the moment, the demand looks strong. And, I think that as long as companies can absorb those inflationary pressures and consumers are willing to pay, it can keep on going for some time.
Yes. Okay. Well, let's talk about market impacts then. Starting with actually earlier in the week, let's start talking about Fed first before we talk about today's data. So on Wednesday, as you know, when the Fed announced tapering for later this month, the U.S. dollar index fell sharply after the announcement. Gold moved up a little bit, but then came back down. So on the day, it was kind of down and flat. We saw some action later this week, but generally, I think gold investors are disappointed in gold's performance, especially considering the weakness of the U.S. dollar. Was gold's performance in line with your expectations, you think?
Well, I think that certainly yesterday was a big day. It was the biggest day that we've seen in gold for quite some time.
Yes.
Looks like there's a decent up move today as well. And sometimes that's what happens with gold, is that it's the actual announcement which creates the catalyst to move up. It's not the expectation, but the actual announcement. And so I think maybe we'll see, but maybe that announcement by the Fed that tapering has actually started. Actually here, maybe that is the catalyst which can drive gold higher. But for me, at least, in the shorter term for gold, I think that what we're really waiting for to drive prices higher is a acknowledgement by the market more broadly that there's a problem with inflation. I think right now, the market, obviously, the only reason we can have all-time high stock markets is that the market, by and large, buys into the Fed narrative that inflation is transitory. It's a short-term problem. It will go away quickly. And I think if that turns out to be wrong, or the longer, obviously, the inflation persists at these levels, I think that the more there'll be acknowledgement that there's a problem. And then when people acknowledge as a problem, there are not many hiding places. And I think gold will be one of the ways to do that.
Mm-hmm. Well, let me propose an alternative theory, and feel free to disagree with me if you like. But perhaps the market doesn't think that inflation is transitory so much that they think that gold is no longer the best vehicle to hedge against inflation. Maybe the market does believe that inflation is here to stay, but they see better things to use to hedge against that inflation, whether it be energy, stocks, or perhaps even cryptocurrencies. What do you think?
I think that the only thing you could probably say, which is new, because obviously nothing else really has changed, other than the tools you can use to fight against inflation in the portfolio. The only thing that's really new is cryptocurrencies. And so from that perspective, yes, of course, you've heard a lot of chatter around Bitcoin and other particular cryptos being able to act as a hedge against inflation. I guess that's really just down to somebody's belief, if they really think that that's the case. I mean, so far the volatility has been very high, and we just don't have any kind of empirical evidence over the long run that a currency, a cryptocurrency, can act as a legitimate hedge against inflation. Now, that being said, it's not going to stop people from buying it and holding it on that basis. But I think outside of crypto, the toolkit hasn't changed. Your weapons to fight against inflation are still the same as they always are. And I think gold, no doubt broad commodities, for example, has seen a lot of inflows. That's been a big beneficiary of the inflation argument. Tips, naturally, a lot of people will go to. But I think gold as well. It's just at the moment, I still see much more risk-on kind of behavior. In other words, people buying stocks, people buying other riskier assets versus really kind of accepting, hey, we need to be a bit more defensive here.
Well, other base metals and commodities have performed much better than gold this year. I mean, while inflation has ticked up this year, gold has not. So objectively speaking, it hasn't really been working so far for gold as an inflation hedge in 2021. Things like copper, for example, went up a lot. Was that because of the inflationary aspect, or were there other aspects, other factors pushing up base metals like copper?
I think it's really more a supply-demand issue when it comes to metals like copper, obviously, that really are key in terms of the global economy. And so that, to me, was purely about, or is, I should say, because it's ongoing, the recovery, the global economic recovery from the pandemic and increased demand versus supply, which has been curtailed. And again, over the many, many years, lack of capital expenditure within the space to bring on more supply. So if you look at the base metals, really everything has performed incredibly well this year. Probably really the only standout exception is iron ore, which is down quite considerably. But that's more of a Chinese issue than anything else. But if you look across the commodity complex, whether it's energy, base metals, or agriculture, nearly everything has had a great year.
Okay. If someone would ask you, hey, Will, look, can you help me out here? I know nothing about gold. Why should I buy gold? What is the purpose that it serves for my portfolio? What would you say?
Well, to me, the gold is like a permanent piece of real estate, right? That you have, I think everybody should have an allocation to gold in the portfolio. And to me, gold is not a get-rich-quick scheme. So I wouldn't think of gold in the same way as you think of some other riskier assets. Gold is defensive. It's a store of value. And it's a different return stream from other assets in the portfolio, which are mainly going to be equities and bonds. So think of gold as being something that's uncorrelated to equity markets and to bond markets. And that's the real value. It's something that is a hedge against the dollar or the weakness of the dollar. And so to me, you always want to have a bit of ballast in the portfolio in case something goes wrong. And so equity market sells off, the bond market sells off, there's inflation pressures, other things. I think having a piece of gold, an allocation to gold in the portfolio is always something that's a sensible thing.
So you're absolutely right. It does hedge against the dollar, and it is a diversifier against other assets like bonds and stocks. But interestingly, when there is a major flash crash, if you will, like last March, for example, everything moves down together. I mean, the correlation between asset classes becomes one. And so we see stocks fall, gold fall with it, and then a recovery takes place. So would you consider gold a hedge against equity volatility in that sense?
Yeah, but I think people have to understand why that happens. And so gold is money, right? Gold is something that's redeemable all over the world. Gold is gold. And what happens is when people hold gold and there's a liquidity crisis or any kind of market meltdown, like we saw in March or like we saw in 2008, the first thing people do is they get margin called for the more riskier parts of their book, or the assets, the more riskier assets in their book sell off, the widest or the quickest and the furthest. And so they need cash. And what do? Most of the time, they're light on cash in the portfolio, but clearly if you have cash, use margin call, and then you sell your highest grade assets, i.e. gold, in order to meet those margin calls, in order to service or insulate the portfolio from those falls. What we see happening is that's what is the original or the first kind of flush in terms of why gold moves down, is because people are selling it to generate cash in portfolios. But after that happens, then people realize, hey, I need gold in my portfolio. I need to own this. I don't know where the market's going. And so then there's a wave of buying, which then moves the price back up. And that's what we saw in 2008, where gold sold off originally for those reasons, again last year. And I think that will always be the case, that it's a blessing and a curse in a way that gold on the one hand is a hedge against these kind of events, but at the same time, it's one of the highest quality assets in the world. And so people are going to use that to their advantage if they've got losses elsewhere in the portfolio.
Mm-hmm. Now, I know that Granite Shares also offers exposure to other commodities like platinum, for example. So let's talk about the other commodities for a minute. We've talked about gold as a hedge against inflation and equities. How would you perceive the other commodities, the other metals, in terms of their purpose in a portfolio, and finally their performance in your outlook?
Well, silver is very similar to gold, so I don't think it's really possible for silver to have a great year in a market where the gold price is not going up also. So I think silver is just a more volatile version of gold, and so for an outlook, you need gold to go up. I think for silver to go up as well. The other metals are very different. So you mentioned platinum. Platinum struggled this year largely because of what's happening in the auto industry, specifically the supply chain concerns, because the biggest amount of demand for platinum comes from autos in the catalytic converters. And so the car sales, if we're not selling enough cars, that impacts the demand for platinum. So that metal struggled this year. Palladium to a lesser degree because there's more of a supply shortage, more of a squeeze in that market. However, I think with the supply chains opening up, hopefully that is one part of the economy that is relatively transitory. Again, there's no overnight fix for what's going on in terms of global supply chains. But I do think that will start to ease a little bit next year. And so hopefully that will be positive for some of these metals that have been beaten down a bit on the back of these supply chain concerns. And platinum is probably the number one in terms of metals that have been beaten up because of it.
So you're saying that the supply chain issue could be resolved by next year, which means we'll no longer have chip shortages, which means that the used car industry is going to suffer a little bit while people can finally buy new cars? Is that kind of the logic here?
Well, I did say resolved. I think it will certainly get easier.
All right.
Next year. Sorry. And hopefully it does resolve itself. But I think some of these issues are run a bit deeper than some of the things you read about in the news. And so I think I do expect to get the supply chains to get a bit easier next year, and therefore that I think will be positive for metals like platinum.
Well, speaking of cars, you've obviously, of course, heard the news. Hertz just ordered, I can't remember the number off the top of my head, but a lot of Teslas, 100,000. Okay, it was the largest order on record, and so we're seeing mass adoption of EVs happening right before our eyes. What's that going to do for the metals complex?
Well, it will do wonders for the metals that we need in EVs in particular. And so, any metal that is involved in, and I should say, not just today's battery technology, but the future battery technology, that's evolving all the time. So right now, whereas lithium-ion batteries seem to be their dominant market share, if you will. But that may not be the case in a few years' time, because obviously there's a huge part of innovation to try and get those batteries more and more efficient, more and more effective. But yeah, I mean, you mentioned a good point, David, because we're coming up now in a time when the UK's come out and said that they're banning sales of internal combustion engine vehicles by 2030. European Union as a whole by 2035, and then here in the States, obviously, with New York and California signing up to the 2035 date as well. So that's not that long from where we are today before you're not going to be able to buy a gasoline car or a diesel car. So there is a big push into these alternative technologies, EVs specifically. But I think hydrogen is going to be another alternative energy source in the vehicle market. That's something that there's a lot of money being spent on the technology there, something that benefits platinum, for example. But yeah, I mean, the metals that you need for these new technologies to bring about this transition to EVs, transition to a carbon-free or at least a reduced carbon world, I think is the next super cycle in commodities.
Just on that note, the 2030 and 2035 deadlines, are those, like you said, they're just around the corner. Are those realistic, do you think? You think people can actually meet those deadlines, or are they going to have to push it back somehow?
I mean, who knows? I mean, you're talking about politicians and government policy. But one thing we do know is that Tesla is the dominant player in the EVs. The market cap of Tesla speaks for itself. So if you're a car company, I'm guessing you're looking at that thinking, whatever they're doing, we got to do more of it. And if that's making EVs, we're doing. And you obviously see these announcements all the time from everybody, from the big European manufacturers to the big US manufacturers like Ford and GM, etc. Everybody's getting in on the EV game. I think that there's a good reason. And I guess I don't have any reason to say that it won't be met, but at the same time, it's not far away.
That's right. So let's put all this together then. Will, what is your outlook for 2022 in terms of the commodity space? Which is your preferred commodity from an investment viewpoint? And I'm putting in gold and silver into the commodity category.
Well, I think next year, I mean, to me, what are we really talking about? We're talking about the reopening of the global economy. Yes. I think in that perspective, the base metals or the pro-cyclical commodities, I think, will likely continue to do very well. I think the problems that we're seeing in energy markets can still continue into next year, will continue into next year. That means elevated energy prices. I think what's happening with the demand for metals, just the broader reopening, not just with EVs and decarbonization, but with just simple demand for all sorts of products which need copper, which need nickel, which need all these base metals. I think that will increase. And so those are probably the two areas I think will probably stand to do best next year. Obviously, if there's an inflation surprise, then gold can do very well. But at the moment, I think it's more about the pro-cyclical commodities for next year.
Excellent. Well, excellent thoughts as always. Thank you so much for coming back on Kitco.
Thank you, David. Pleasure.
Thank you for watching Kitco News. Don't forget to subscribe to our YouTube channel. Where are we right now in the commodity cycle?
She ain't mine, but she looks fine. Gonna take some time, gonna make her mine, gonna make her mine.
So गोल्ड का मूव वापस से थोड़ी सी रिकवरी 1823 के आसपास 1821 1822 के लेवल्स पे लगातार प्राइसेस मूव करते हैं पूरी स्टेबिलिटी के साथ। तो हम लोग आज का सेशन यहीं पे एंड कर रहे हैं और बाकी की चीजें डिस्कस करेंगे कल के सेशन में। So thank you so much for joining and concentrating for your precious time. I'm ending this session right here, right now. So हम लोग आज का सेशन